What do you think the key thing to look out for, Tom, this earnings season is, given those changes we got to how they report last quarter?
Sure. So I think the big thing for Apple is they indicated they're no longer going to give you unit sales. And given that it looks like unit sales were weak in the quarter, what are they going to tell us? For example, to what extent was it limited to the 10R among the devices? But I think the more important thing for Apple is, looking ahead to the future on a near-term basis, what does the March quarter look like? And then longer term, what are their plans to divest away from their overexposure to the smartphone?
Walter, what do you think is going to be the biggest factor, given they've already put out that warning about China sales?
Right. Clearly, it's about the guidance, right? Where the consensus estimate is just under 60 billion. So that top line guidance for the quarter, because you've had a lot of people kind of pile on after the pre-announcement in terms of how bad it can get in the March quarter. So if they can deliver on that guidance. Also, how much was China down, right? One of the excuses was how bad China was in the economy. People have been trying to weave this tale of replacement cycles with this never-ending extension of the replacement cycle. So if we see that China was really bad, that obviously maybe lessens some of the concerns about the replacement cycle. Lastly, services, right? Everyone's focused on services now as well. How much, because there was a beat on all the other sectors. So how much of that was services versus iPads versus Mac? So there's a lot, I think, to unpack for tomorrow, but obviously the key one's going to be where the guidance is for the next quarter.
Tom, what's your kind of estimation of what at this point is priced in for Apple, even on a longer term basis, because it's been a relatively weak bounce given how much the stock was down into the lows into early January. Obviously, the valuation is back down toward the lows of the last several years. So what do you think right now is captured in this valuation?
So first off, I think that's an excellent question, and I think that's kind of the most important question for all our companies in consumer tech earnings season. So we know that China is weak, and we know that the smartphone is weak. As the other person was talking about, if you looked at their performance, they had 19% growth in everything that wasn't a smartphone in the December quarter. So I would argue that weakness in China and weakness in iPhones is priced in, and to some extent, weakness in the March quarter is also priced in. So I think we'd have to see something really ugly out of China or on iPhones for the stock to be under more pressure after they report earnings tomorrow.
Walter, for their non-developed markets point of sale for the iPhone, China was a big portion of that. And we know clearly there's smartphone saturation already in developed markets like Europe and the US. Does that mean they now have to bring in some kind of lower price phone and have a fuller suite of options like a Samsung does? Or is that in fact something that the stock price would react negatively to?
Sure. I mean, they haven't grown iPhone units for 3 or 4 years now, so it's not like it's a new phenomenon that they haven't grown units. Obviously, they've leaned heavily on increasing price to drive some amount of revenue within that segment, particularly over the past year. We just need to get through the next year. If China is truly the culprit here, it's going to take a couple quarters to digest that. And then in a year's time, you can look out to maybe some low to mid-single-digit growth, with some share repurchase taking that to 10% earnings growth, and maybe the stock can then recapture some of the sell-off that it's had in the PE multiple, which now is like a 25% discount to the market.
I mean, the company, Tom, came out and said it's China concerns, it's the China weakness. And yet that prompted all sorts of other concerns out there and lots of discussion about whether iPhones had peaked and whether they were just charging too much and not innovating enough when it came to the latest phones. How do they answer that tomorrow if they're not willing to put out shipment numbers?
Sure. So I think they're going to have to provide, obviously, qualitative commentary on performance if they're not going to tell us specifically that units were down 5 or 10% or something of that nature. But I definitely think that of greater importance than in other quarters, it's going to be the company's strategy going forward beyond smartphones and beyond China that I think is going to have a big impact on the performance of the stock. If they aren't going to come out with the lower priced device to go after emerging markets, then what are they going to do to drive growth going forward? Is it going to be new products and services, or are they in fact going to try to figure out a way to offer a lower cost smartphone in some of these emerging markets to take share?